According to supply managers in the 9 Mid-America states, how is the economy performing?
Our survey of manufacturing supply managers in the 9 Mid-America states, the overall reading for the month of October was down from last month, but still above growth neutral, 51.5, and that's down from 52.5 last month. I would say the manufacturing economy, according to supply managers, is limping along, but still in the positive direction. This is the second straight month that's been above growth neutral. 60% of the manufacturing supply managers expect a downturn in economic activity over the next 6 months. Only 1 in 10 sees growth ahead, so that's not exactly what we're looking for, but it's still above growth neutral for the month. Greatest risk, we asked about the greatest risk for the regional economy and the national economy going forward. Inflation was number one. 4 of 10 said inflation is the biggest threat going forward. Supply chain disruptions was 2 of 10 indicated that was the biggest impediment to growth ahead. And then 3 was labor shortages, and that's labor shortages 3 of 10. And then finally, 1 out of 10 indicated higher interest rates. So all in all, it was, again, a good report, but the supply managers are really concerned about what's ahead for the economy. Here I'll bring up the chart, which shows in blue there. You'll see the Mid-America region, the numbers, of course, down for the month. And the national number comes out there in red. It'll come out later on this morning. So all in all, it was an okay survey, but not as good as we'd like to see.
What were the hiring trends?
Hiring was not good. The number moved below growth neutral, 47.5 for the month of October, and that's down from September's 51.5. Approximately 25% of the supply managers reported job losses for their company. Now we're still, on top of that, we're still seeing labor hoarding, meaning keeping workers on just in case the difficulty in finding and hiring qualified workers. So they're still holding on to some of those workers even with the downturn and even with slow business growth. The the regional economy grew, Mid-America region, at 0.7%. The last 3 months annualized, 0.7%. That compares much less than the national number, which was 1.7%. So it's not good. I calculated the wage growth over the last year, and wages expanded by 3.4%. Now, unfortunately, that's about the rate of inflation over the last. It's actually a little bit less than the rate of inflation over the last 12 months. So all in all, the labor market is showing some stress right now, but again, it's not as much as we might have expected several months ago.
What inflation trends are you noticing?
Inflation's moving like the overall regional economy. It's coming down, down, down. The overall reading, that is, still above growth neutral. Price gauge fell to 55.0 from 68.2 in September. And this is the lowest reading since December of 2022. So all in all, inflation is definitely coming down, but we've still got more inflation out there than we'd like to see, at least according to the Federal Reserve. Federal Reserve meets this week, and of course they're not going to raise interest rates at that meeting, but they're going to indicate that they're still on track to really put pressure on prices, downward pressure on prices, that is. Keep an eye on the month-to-month. There's a lot of talk about year-over-year, but now look at the month-to-month reading in terms of labor, the employment report, which comes out normally the first Friday of every month. Watch out for that one, but again, look at the latest reading. One thing we asked about the supply managers about was they predict or forecast how much they think prices for the products they purchase are going to grow by over the next 6 months. And they reported a 4.2% on average increase over the next 6 months. Of course, you double that for a year and you get 8.4%. That's well above inflation, and that's a concern going forward for the region and for the nation, and for that matter, the Federal Reserve. Again, I expect a Federal Reserve rate hike in December, 0.25%, 25 basis points. The CPI now is growing at 3 months annualized is 1.2%. The core is at 0.8%. Then you look at the PPI, the wholesale price index, which we track here and what we're measuring, it's 1.8% annualized. That compares to services 1.3%. And what it's important to recognize that what we're talking about is disinflation, not deflation. It's all so individuals sometimes think that the inflation is coming down. They expect to see lower prices out there. No, it's not going to be lower prices. It's just the growth is going to be less than what we've seen in prior months.
What is the economic outlook?
The outlook is still, I'm expecting a slowdown and a fairly significant slowdown. I'll call it a rolling recession, meaning certain parts of the economy are not doing well right now, particularly banking, not well at all. Now the larger banks are doing quite well, but the regional and community banks not doing as well with the outflow of deposits, which is really causing real problems for the banks. Manufacturing is slowing, certainly losing. We're seeing at the national level and regional level there job losses over the last several months, but nonetheless the manufacturing sector is holding up, but a slowdown's in place. Real estate is something we needed to keep an eye on going forward, particularly commercial and residential. Those two sectors, there's just some real issues. There are some real concerns there going forward in terms of housing prices, housing availability, and the overall housing sector. I expect a rate hike at the December meeting of the Federal Reserve. That's December the 13th. They meet 12th and 13th. I expect a rate hike then, not this month. It's going to be a no event this month in terms of raising rates. They'll continue to indicate that they're going to continue quantitative tightening, meaning they're going to be selling bonds into the open market or allowing them to mature. Of course, that puts upward pressure on long-term interest rates. A CPI month over month, we're still going to continue to see that upward pressure on that, but inflationary pressures are coming down though, and that's good news. The problem is it's getting the sticky part. In other words, the difficult work is ahead. The Fed is trying to get down to 2% on the inflation front. That's going to take some more effort, going to take some more rate hikes in my judgment. Too much federal spending out there. There's too much money that's been previously spent, too much money that's going to be spent. So that's going to put some pressure on the Federal Reserve to keep interest rates high or in fact increase interest rates. The prime rate will rise by another 0.25% by middle of December, actually December 14th. We'll see an increase in the prime interest rate by 0.25%. But what you need to keep an eye on, this is very important, keep an eye on that bond market. The bond market, the 10-year Treasury, that's moved up above, it's bounced above 5% during the day in markets in the U.S. That hasn't stayed above 5%. If it does move above 5%, that's something to be really concerned about. What that does to mortgage rates is going to be an issue. And again, that puts downward pressure on the real estate market. Keep an eye on these national ISM readings, Institute for Supply Management. That number for the U.S. comes out later on this morning. I expect that one to be much like ours, probably above growth neutral, but only slightly above growth neutral. Treading water, I'll say. Keep an eye on the price of a barrel of oil. With what's going on in the Middle East, that's a real issue. If that spills over, metaphorically speaking, spills over into the oil market with higher oil prices moving above $90 to $100 a barrel, that could be a real problem for the economy, of course, and consumer spending as we move into the holiday buying season. And finally, listen carefully to what the members of the FOMC, the Federal Open Market Committee, that's those who either increase, reduce, or keep interest rates the same. Listen to what those guys and gals say going forward. Very important. What Powell says this week is going to be very important. That will be on the 1st of November. He'll be talking to the press, and I expect him to drive somewhat of a hard line. So that's our survey results for the month of October. Thank you for joining in, and we'll wait till the first business day of December to talk about our November results. Until then, may your economic cup runneth over, and thank you.